Hello and welcome to cryptoTV. I'm your news host Dharamjot Kaur, and let's get into the world of crypto with English News Bulletin. Pantera Capital to increase India focus as it closes crypto blockchain funds. Crypto sell-off stabilizes, Bitcoin remains below $36,000. US officials add North Korea-linked mixer to sanctioned list. Google's cloud unit sets up Web3 team to tap crypto opportunities. Multicoin Capital loses 95% of its investment in Loot NFT project. Nvidia penalized for hiding details of gaming GPUs sold to crypto miners. 9 out of 10 central banks exploring digital currency, BIS says. Ferrari subdomain hijacked to push fake Ferrari NFT collection. Rapper Ice Cube shows support for Dogecoin as Big 3 takes off. Crypto and blockchain-focused hedge fund Pantera Capital plans to increase its focus on Indian crypto and blockchain startups as it closes 2 funds. Dan Moorhead, the former head of macro trading at Tiger Global and founder and chief executive of Pantera Capital, announced that it was raising $200 million for a dedicated crypto growth fund, Pantera Select Fund. Pantera is also expected to close its $1.3 billion blockchain fund next month, more than double the target of $600 million. Pantera Capital has closed about 10 deals in India, including one with crypto unicorn CoinDCX. Cryptocurrencies remained under pressure amid risk-off sentiment as central banks around the world tightened monetary policy by hiking rates, forcing investors to unwind their speculative positions. BTC failed to hold $40,000 over the past few months and is down by 47% from its all-time high around $69,000 achieved in November of last year. The long-term uptrend has weakened, which suggests upside remains limited this year. However, the sell-off slowed in the past 24 hours after cryptocurrencies posted their biggest drop of the year on Friday, as long-term investors continue to remain invested. Bitcoin was recently seen trading at around $35,900, down nearly 1% in the past 24 hours. Ether, the second biggest cryptocurrency, was around $2,600, down nearly 2% in a similar time span. The US Treasury Department's Office of Foreign Assets Control, OFAC, sanctioned Blender.io, a North Korea-linked crypto mixing service that obfuscates the origin and destination of Bitcoin transactions on Friday, and added Bitcoin and Ether addresses to its blacklist. Friday's update listed 46 Bitcoin addresses and 12 Ether addresses. The Bitcoin addresses were all tied to Blender, while the Ether addresses were linked to the North Korean hacking group Lazarus. OFAC has previously sanctioned several Ether addresses and Lazarus itself on suspicion of stealing over $600 million worth of crypto from play-to-earn game Axie Infinity's homebrewed sidechain Ronin. According to the release, about $20.5 million in proceeds from the Ronin attack was laundered through Blender. This is the first time a crypto mixing service has been added to OFAC's sanctions list. Google's cloud arm is forming a task force to build services for developers running blockchain applications as the company seeks to benefit from surging popularity of crypto and related projects. Google Cloud wants to become the first choice for developers in the field. Google wants to offer back-end services to developers interested in composing their own Web3 software as the company battles for market share in cloud infrastructure. According to officials, Google isn't trying to be a part of the cryptocurrency wave directly and wants to become the provider of technologies for companies to use and take advantage of the distributed nature of Web3. Multicoin Capital, which claims to be a thesis-driven investment firm focused on cryptocurrencies and blockchain companies, has lost 95% of its $10 million investment in buying non-fungible tokens of Loot project. Kyle Samani, the co-founder and managing partner at Multicoin Capital, in a tweet, while acknowledging the loss, said willing to lose 100% of capital at risk was very important to the firm's long-term success. Loot, which generated over $230 million in sales in the first week of launch, is an NFT project consisting of 8,000 unique bags of RPG-style adventuring equipment. The project was launched by Dom Hoffman, co-founder of the social media platform Vine. Unlike other collections that display images or the so-called profile picture-style NFTs, Loot featured randomly generated texts. The idea was that the text would be used in yet-to-be-created games. The collection was free to mint. Since Multicoin's investment, the floor price of Loot has now dropped to 1.1 ETH, or around $3,000 at current prices, from $35,000 or 9 ETH on September 5 last year. The US Securities and Exchange Commission has announced charges and a settlement with graphic card making company Nvidia for allegedly hiding information from investors on how the cryptocurrency boom impacted its GPU sales. Nvidia will pay $5.5 million to settle charges. The SEC stated that Nvidia failed to disclose that crypto mining was a significant element of its material revenue growth in gaming GPU sales. The SEC's order also found that Nvidia was inconsistent on revealing crypto's effect on various parts of its business, creating a false impression regarding its impact on the crypto mining market, therefore misleading investors. Nvidia hasn't admitted to any wrongdoing but negotiated with the SEC and agreed to a cease and desist order related to its alleged failures of making adequate disclosure. 9 out of 10 central banks around the world are exploring central bank digital currency (CBDC), according to a survey conducted by Banks for International Settlements. Nearly 2/3 of those banks are developing or testing a retail CBDC, a digital currency designed to be used by consumers, the Central Bank of Central Banks said in the report. In advanced economies, interest in a CBDC is driven by the desire to make domestic payments more efficient and ensure financial stability. Though the same factors are important to emerging markets and developing economies, they are above all driven by the financial inclusion-related motivations, the BIS said. However, a quarter of all responding institutions who are looking into a retail CBDC said there may be no role for private banks. One of Ferrari's Subdomain was hijacked yesterday to host a scam promoting fake Ferrari NFT collection, according to researchers. Last year, Ferrari announced plans to launch NFT products in partnership with tech firm Velis, making this scam all very convincing. Sam Curry, ethical hacker and bug bounty hunter, reported seeing one of Ferrari's subdomains, forms.ferrari.com, hosting a fake NFT scam. The Ethereum wallet associated with the cryptocurrency scam appears to have collected a few $100s before the hacked subdomain was shut down. Fortunately, Etherscan has flagged the wallet address as reports emerged of suspicious activity linked to the wallet. That's all for today's news. I'm your news host Dharamjot Kaur, signing off for now.